Hi there, you're watching Your Trades on ET Now. This is Priyanka Pal along with me. Sneh, what a relief shot we saw in the markets today.
Much needed, Priyanka.
Much needed. Trump, especially after announcing a pause of 30 days, looks like the kind of optimism it spurred in Asia Pacific market. Indian markets completely cherished this. Heavyweight participated, stocks wherein the move was coming, which was due because of good earning, good numbers, or maybe the budget move. To some extent, wherever there was the move which was due, we could see a complete short covering rally today. Nifty shot up by 1.6%, more than 300 points up today. Heavyweights like Reliance, HDFC, ICICI Bank, everyone participated. Bank Nifty was up by 2%, jump of nearly 1,000 points in a day. What became now, focus has completely shifted to RBI policy now. PSU banks were up by 2.5% today. PSE index was up by 2.8% today. Infrastructures were up today. Capital goods stocks, the subsectors, if you talk about, many of the subsectors which were the clear standout gainers today were capital goods stocks, especially from the SMID space like ABB, Cummins, REC, BHEL. FMCG and consumption, only two spaces were at the back foot, wherein the move was captured on the day of the budget. But on the contrary, wherever there were concerns related to the Trump tariff or the global trade policy, global currency trade war policies, which could be impacted, they all saw a stellar move today. Currency move, of course, it was a wildest swing what we saw yesterday, but today was a big respite, a good short covering move came in. Even stocks like L&T, the post the numbers, the kind of order book L&T and the kind of numbers it registered, much awaited move which was due came in today for L&T. IndusInd Bank, the kind of move IndusInd Bank showed, even Shriram Finance for that matter, that was on majorly on the green financing move, but commendable move coming in, and even the move on the brokerage note were also commendable today. All good to talk about markets.
Lots of stocks, in fact, were doing well. Even the numbers that trickled in yesterday post-market hours that weren't largely what the street was expecting, those stocks have also moved on to the green because of the overall market positivity. You have the likes of Asian Paints that were in focus today on the back of an inline set of numbers coming in. That stock initially surged 5% when numbers came out, because if you take a look at what the numbers look like, only revenue was largely in line with what the street was, rather revenue was a miss compared to what the street was expecting. PAT, EBITDA and margins were in line with what the street was expecting, so it looks good for Asian Paints, but it did not warrant an uptick of 5%, but nonetheless that stock was higher, simmered down after some time after the stock settled in, but 2.5% uptick coming in on Asian Paints as well.
It could be possibly because the decorative paint business that showed a volume growth of 1.6%. There was no expectation actually.
Because last quarter, if you remember, the entire paint segment segment was under pressure. You also have new players like AkzoNobel, you have Villa Opus, all of them, they are coming into play as well, Grasim being one of those. So paints have been under some pressure, but there's positive surprise coming in from Asian Paints as well. Trent was one stock, like Priyanka mentioned, the entire consumption space was on the downtick on the back of this news flow that Shein has once again made its entry into India in partnership with Reliance Retail. Same segment as where Trent operates via Zudio and Westside. Not Zara, but at least Zudio and Westside operating at the same segment as Shein. So that is the one stock that took it on the chin today. 6.5% lower is where Trent was in today's trading session. On the back of earnings impact, you had Power Grid, Castrol, Tata Chemicals, all of them were in focus. Castrol saw a very sharp uptick coming in. NLC India also double-digit gain coming in for the day. But that's what the market lowdown was like in today's trading session. All in all, we've seen a very good day. But is this sustainable, or is this just a one-off wonder? Let's understand from Amar Singh, the Senior Vice President of Research at Angel One. Amar, hi, welcome to the show. This is what we want to understand from you primarily. Today, what we have seen is a much needed respite. A 1.5% uptick on Nifty is something that the street was not expecting, but turns out that in all of this tariff war between China and US, India has seemed to have won this battle over here, even though we are not even a part of it, but it looks good for us right now. Tell us what you're making of the market moves today. Is this uptick that we've seen today a sign that we are once again in a recovery phase, or is this just a one-time wonder and we should not get our hopes up too much?
Yeah, thank you for having me on the show. So I would say it's definitely good to see some strong green days, because we've seen a lot of correction and across the board. So I would say that if you look at the overall structure of the markets, and also, as you rightly said, that the data flows which are coming in and the Donald Trump statements, they are definitely having a significant impact not only in India but across the globe. And looking at the markets, if I look at the major benchmark indices, definitely it was appearing that there's some sort of bottom formation. And when Nifty traded below the 23,000 level, went up to almost 22,700 plus levels. From there, we've seen almost 1,000-point rally. And in the budget day, we saw that there was marginal correction there, and then the markets have took off. So now the important level to watch out for, I would say, if you look at the intermediate term structure of the markets, that clearly tells me that yes, the short-term trend is definitely up, but the intermediate term trend, the index or the indices are going to meet with resistance higher. So as far as Nifty is concerned, I would say anywhere we could see a 200, 300-point rally from the current levels also towards 24,000 odd levels. So 23,900, 24,000, that should act as a zone of resistance. Because looking at the structure and also at the data flows, and that's where the markets should ideally meet with some sort of selling pressure. So those who bought in, they would likely book their profits around those levels, because nothing material, if you see, has changed. It's just a piece of data flow that has come in, which has led to this sort of rally. And either if you look at corporate earnings or if you look at the GDP growth, they are not changing in a hurry. Yes, we did witness some significant up move and positive momentum built on the income tax rebate, so of close to 1 lakh crores going into the hands of the taxpayers. So that would have an impact, but those are some things which will take time to materialize. So having said that, I would say one needs to be slightly cautious, not get carried away, as you rightly said. On the upside, 24,000 is going to be the level where we could meet with selling pressure, and that's where we could find some fresh short positions also being built in the market. But yes, it does appear that Nifty is likely to trade in a range now. On the downside, major support is somewhere around the 23,000, 23,200 level. Upside, as I mentioned, 24,000, that should act as a very important zone of resistance.
So we get that, Amar. So there's a room for 300 to 400 points more. And however, let's also understand, maybe this is also relating with one more view. Now the focus is shifting to RBI policy, which is due on 7th February, the outcome. So we do have, and there's nothing significant coming in tomorrow. And this is the reason maybe there, we will see a better delivery volumes today. Traders could take it with a conviction today. But now what are the trades that you're suggesting for tomorrow?
Yeah, so the first trade to look at is Tata Motors, because if I look at Tata Motors, it has witnessed a significant beating, I would say, from almost 1,200 levels. Currently, it's around 700, 710. It's around support levels. We've seen some significant buying happening a few days back when it had made a low, and it's seems to be forming a bottom. So this is one stock one can look at buying at the current levels for a target of 747 on the upside and a stop loss of 679. And the other stock to look at is from the banking space, and that is Kotak Mahindra Bank, because there is, as you rightly said, we have the RBI policy also, and there are expectations that there could be a rate cut which could materialize. And looking at the technically on the charts, Kotak Mahindra Bank, some of the technical indicators from a medium term to long term perspective, they have turned positive, and they have turned extremely positive. So now Kotak Mahindra Bank sustaining over the 1925, 1930 level, because currently it's around 1928. Sustaining over these levels, it has the potential to rally towards 2027 odd levels. So anywhere around those levels, one can have a target. And the stop loss for Kotak Mahindra Bank needs to be below the 1860 level. So this is the second stock one can look at from the banking space.
Thanks, Amar, for sharing your market views as well as your picks. Tata Motors and Kotak Mahindra Bank looking good to Amar on the technicals right now. On that note, we'll let you go. Thanks once again for joining us. Let's keep it going with words coming in from the expert then. And Swanand Kelkar, who we managed to speak to earlier in the day, and managing partner at Breakout Capital Advisors, selectively likes new age tech stocks. He owns Zomato and sees a huge runway for select platform companies. Let's go across and understand what's driving this conviction and what are the other stocks that he's liking from this basket.
So I'll tell you the logic on Zomato, right? I mean, we like the fact that on food delivery, this was becoming a duopoly. And this still is a duopoly. And duopolies make money in general, except if you're Airbus and Boeing. So Zomato and Swiggy both were making good money on food delivery. The platform companies, if you have been a consumer, they're very habit forming, right? So I feel that the growth runway is reasonably large. I like in general these platform companies. There will be competitive ebbs and flows, right? When something is growing 100%, it will be foolhardy not to expect a competitor to come and try and get a piece of that action. But my bet here is that the pie is growing so fast that even if the slice of the pie becomes smaller, there is still money to be made.
Huge growth way still there for the platform company, for the fintech company, especially he was speaking about Zomato. Moving on, RBI is keeping a close eye on the depreciation of the Indian rupee. That's the word coming in from Finance Secretary Tuhin Kant Pandey. Listen in to what else he had to say about the currency in an exclusive conversation with ET Now.
Rupee is in a free float system, so the external things are working. You know, I mean, the RBI is watching, we are watching. Yes.
Sir, again, sir, on US thing, it's evaluating everything. It's wait and watch approach currently you have. Sir.
Yes.
That's the word coming in from the Finance Secretary on what the RBI is doing when it comes to the free fall that we've seen recently in the rupee that crossed 87 yesterday. But, well, some respite being seen on that front today. But on that note, let's also take a look at what's been happening in the world of FNOs and how is the derivative space shaping up. For Nifty, we're seeing short covering, and same for Nifty Bank. We're seeing some short covering happening over here, so looking very positive, especially after the day that we've had in trade today. India VIX has cooled down 2%, surprisingly in a last-minute action coming in on India VIX. Last few minutes of trade, it cooled down because if you remember, over the majority of the day, India VIX was up by 2%, but we are very close to breaking below the 14 level. So looking very good when it comes to the India VIX as well. If you take a look at the active calls for the February 6th expiry, call unwinding being seen at 23,800 and 23,900. You also have active puts, and put writing has been seen at 23,700 and 23,600. Of course, with a one-off like we've seen in the market today, a 1.5% uptick coming in on Nifty, we do not have any visibility on a support and a resistance level. That is not that's not surprising to see, but well, this is looking healthy because call unwinding is being seen at 23,900. So let's just see what the next level for Nifty is going to be. But well, yes, this 1.5% spike we've seen today has been a much needed positive respite coming in for the street.
Okay, all right. So looks a good support at 23,600, 700. And Amar just mentioned there could be a room of 300 more points from here. Moving on, talking about a stock which was hammered badly today is Trent, which is under pressure, and one of the reasons cited was re-entry of online fashion brand Shein in India. Reliance Retail launched the app on February 1st. Jinay is here with more details on this.
Well, yes, Trent is under pressure. Well, we have a note by Elara Securities who are maintaining a buy rating on Trent with a target price of 8,500. Now, what they believe is firstly the Shein app, which is making a comeback in India after its 5 years ban. It has partnered with Reliance Retail and has relaunched on February 1st the app. Now the app has initially will operate out in Delhi, Bengaluru and Mumbai, and it has already got 10,000 downloads on the Play Store. Now if you look at Shein, it is basically known for its affordable range of western and fast fashion. If we talk about competition in India versus Shein, the fast fashion offers a fast growing opportunity, and the entry of Shein will likely hit up the competition. Now Elara believes that for Shein, establishing a reliable pan-India supply chain and delivering a model will take about a year or two, which is subject to again a brand traction going forward. Also, they're expecting that Trent's flagship brand Zudio, they will be capturing market share, further strengthening its brand recall. What they believe is that Shein's product offering resembles with that of Zudio. However, the price codes are mostly above 1,000 mark, whereas Zudio's price codes are mostly below 1,000 mark. They also believe that Zudio will further continue to sail through because of its differentiated offerings versus the recent entrants in the space such as Ustar, Style Up and Intune, which are yet to meaningfully scale up yet. And lastly, Shein may also not possess competition to Nykaa Fashion, as Nykaa Fashion's overall AOV is much higher at 4,000 to 5,000 rupees, and that is why Elara Securities believe given a buy rating on Trent with a target price of 8,500.
Okay, well, that's the lowdown on why Trent was down and out in today's trading session on the foray of Shein into the Indian markets in partnership with Reliance Retail. But another stock that was in focus that we highlighted earlier was Asian Paints on the back of its Q3 numbers. Largely colourless quarter coming in for Asian Paints, but nonetheless it was a mixed quarter because revenue was below estimates, but EBITDA margins and your net profit were largely in line. Let's bring in Ravinder on board to get us a sense of what the Q3 numbers for Asian Paints looked like. Ravinder, take it away.
Well, Asian Paint has announced its Q3 FY25 number, and the revenue can be seen at 8,594 crore, which was down by 6% year-on-year basis and below with the estimate. If we talk about PAT can be seen at rupees 1,110, which was down 23% year-on-year basis and in line with the estimate. If we talk about EBITDA margin can be seen at around 19.1%, so which is in line with the management guidance. And the decorative paint business has registered a volume growth of 1.6%, which was better than estimate. If we talk about segment performance, then the industrial business grew by 3.8% on back of the general industrial and refishing segment, and the home decor business benefited with the progress on network expansion journey. And there are also management commentary coming on in Q3 of Q3 numbers, where the CEO of Asian Paint has said that they remain cautiously optimistic on a recovery in demand condition, and the paint industry continued to be impacted by subdued demand condition during the quarter, especially in urban areas. So overall, the Q3 numbers of Asian Paint was in line with estimate.
Inline set of numbers coming in, and the volume growth which came in the decorative business, maybe that is one reason that traders reacted on it. Thanks very much for that brief, Ravinder. But do tell us which were the other stocks which were buzzing in trade today.
Well, Godrej Property is in focus, where company has announced its Q3 FY25 number, and revenue can be seen at around 969 crore, which was up by almost 3 times year-on-year basis, and the net profit can be seen at 163 crore as compared to 62 crore year-on-year basis. If we talk about EBITDA can be seen at 28 crore versus as compared to EBITDA loss of 42 crore year-on-year basis. Moving to next, Mr. Dhatu is also in focus, where company Q3 revenue was down almost 6% year-on-year basis, and the net profit was almost double from 12.8 crore to 25.5 crore. If we talk about EBITDA, then EBITDA can be seen at around 52.4 crore, which was up by 46% year-on-year basis, and the margin can be seen at around 22%. Moving to next, L&T is also in focus, where company to build a 5,000 to 10,000 crore expansion project for a steel producer in Middle East and North Africa region. And lastly, on back of brokerage note, Divi's Lab is also in focus, where Nuvama has maintained their buy rating on Divi's Lab with target price of rupees 6,830, where they have said that the company indicated at ongoing efforts to add a new product or client, and the GLP-1, which is a drug, remains a key growth opportunity for the company, and they expect margin benefit in mid-term due to backward integration at Kakinada plant. Nuvama has raised their FY26 estimate by 3 and 4%, and Goldman Sachs also has come out with a note on Divi's Lab, where they have maintained their neutral rating with target price of rupees 5,925. They raised the FY25 to 28 EPS estimate by 8%.
Okay, thanks Ravinder for joining us with a lowdown on Asian Paints as well as all the stocks that were buzzing in today's trading session. But let's move on and talk about another stock that was surging away in trades. NLC India has delivered a beat across all fronts in Q3. We interacted with the management earlier to understand their outlook on capacity expansion and the IPO on the renewable business. Let's go across and listen in.
9 months period, we achieved almost highest ever total income, highest ever PAT, and highest ever capex. So, and the same thing will continue in the Q4 also, and we are expecting the all-time highest figures in the year also. We are into power generation, mining, and renewable power generation. We are targeting for a production of around 100 million metric ton by 2030. As on date, we are 6 gigawatt company. We are targeting to increase this to 20 gigawatt. As on date, our renewable proportion is 24%. We are targeting to 50-50 by 2030. What we expect is by first quarter of the last quarter of this financial year or first quarter of the next financial year, the IPO will come.
So that's the upbeat numbers coming in, and the stock reacted. With this, it's a wrap on this edition of Your Trace. Thanks so much for watching, but stay tuned for more updates on 2ETR.